Good morning, everyone. Welcome to the Early Pay Partnership Series, episode number 6. My name is Donelle Brooks, and today we're going to be talking about a topic that typically, unless you're working in the industry, unless you have clients that actually work in this space, very rarely will you probably have an FX conversation. And it's something that one can support you in your business, can support you and your clients. And thirdly, there's a lot of savings to be had by doing some research into FX. We proudly partner with Ebury, and we're really excited to have Rick Roache, who is the Managing Director for the APAC region, join us today for episode number 6. Welcome, Rick.
Pleasure. I'm glad to be here. Very mythical and mystical introduction there, Donelle. I'm not sure FX is that complicated, but I guess we'll find out.
Look, and it's not, but for those that don't work in the space, often, people are hindered or not sure about things they don't know. And so I'm hoping today that we can release some of the myths or answer some of the questions that we have. Please, as per usual, make sure you use the chat function. Rick is super open and, super knowledgeable in this space. So it's really important that if you do have any questions that you do put them in the chat. If it's appropriate, I'll interrupt Rick along the way. I'm sure he'll love that. And if not, we'll save the questions to the end. Yes, and good morning, everyone. Good morning, Habib. Nice to have you. I think Habib is our most regular broker attendee on our partnership series. So nice to have you here again. Rick, just to start off with, tell us about Ebury.
Ebury has been described, I think, as the biggest fintech you've never heard of. We operate across the globe. We're in 31 countries. And within Australia, we have offices within the 4 biggest states. What does Ebury do? So we were started in 2009, in London. We help businesses manage their FX. So there's 3 sort of parts with that. One is the cash management aspect. Collecting cash globally, that can be tricky, particularly if you're an exporter. How do I get paid by my clients? And how do I manage and optimize the cash cycle that comes with it? The second part is the FX risk management. So that is, how do I hedge and protect an exposure I have to currency? I might have an asset or a liability. I need to make sure that doesn't fluctuate in time by the time that it's realized. And the last part is the payments that go alongside it. So anyone who's dealt with domestic payments themselves, everyone's been paid late by suppliers, hopefully not too often. But payments themselves are a complex and tricky piece of it. Add in the cross-border layer, and that can be, there can be challenges with that. So we're all of those 3 things we're helping clients with in various portions.
And I guess, when I was doing a bit of research, obviously we've been partnered for a while, but I've only been with Early Pay for sort of the last 15 months. So when I refresh myself, I noticed there's a great podcast on your website at the moment around the dangers that, lurk in uncertain times and with inflation. How does the current economic climate affect FX, and what are some of the things that people should be watching out for?
You have to ask the economics team. I'm kidding. But they're the specialists in terms of talking to clients minute by minute, day by day, hour by hour. In terms of the market that we're in at the minute is really driven by inflation. That's driving, therefore, interest rates, and then that's driving the value of the currencies. A good example is in the UK, the pound is actually the best performing currency the last couple of months, despite them having poor GDP growth, despite them having some of the systemic macro issues. The Bank of England keeps raising rates, so the pound keeps strengthening. So what we're seeing is a real focus on interest rate differentials. That's one of the key drivers. We didn't have this situation during ZIRP through that sort of 10-year period of really loose monetary policy, where everyone was basically at zero. So it was about how's your economy performing, how supply chains going, all of that other more complex stuff. At the minute, the market is just focused really strongly on, are you going to raise rates and when? And are you going to raise rates is driven by what's the inflation. So if you look at all developed nations, really apart from the UK, inflation looks to have topped out to a degree. And then we're seeing some of the second order impacts from that New Zealand dollar. New Zealand's actually entered a recession. They raised aggressively. Arguably, that's what they wanted. That old adage of, it's the recession that you deserved, and that we needed. So that's what we're looking at. It's not just about when the central bank raises. It's the timings, because even a mismatch of 3 months means that your currency may get sold off quickly, by 5%, let's say, and 3 months is a long time in FX. It's a lifetime. It might be between the time when you spend that money and then actually paid it. There can be a big mismatch.
Yeah, absolutely.
Does that answer your question?
Yeah, it does. And I think it's really important too, because, from in a consumer world, you see people are buying cars today that get delivered in 18 months' time, but the purchase price is what they've bought it for today. But we know certainly that typically in the rest of the world, and certainly in business, that that's not the case. So how do you help? How do you help clients? How do you help businesses? Why would they come to Ebury?
So I guess it's product and then service and then expertise, right, which goes alongside it. So for all of those problems I described, we've got different segments of clients roughly, but across them they overlap. So you'll have our bread and butter SMEs, again, which will have the majority of our client base, and I think would overlap with you in that aspect. So they're typically importing. Aussie's an importing nation, right? And so typically they're using us for hedging that supply chain, hedging the cost. They're ordering a boatload of shoes, and they are paying into China. So we're having that conversation around, are you hedging correctly? Is your hedging policy set up well? So are you hedging for the right period of time? Are you hedging in the right currency? Because often they might be hedging in US dollars and actually they're paying into China. They should be using the local currency. And we see that a lot through Southeast Asia. That's a real common problem and misnomer. And then so we've got institutional clients. So that's your funds, and they will be using us for different things, hedging your balance sheet, perhaps bigger numbers and more complex arrangements. Again, it comes down to why do they use us? Because we've got the time, energy, expertise to sit down and design a program that works for them. And then we've got e-commerce clients. So that's a lot of the technology enabled and driven clients. So if I'm selling on a marketplace, or I'm selling on my own website with Shopify, for instance, you're going to need another layer of technology that really no one else in the market has. So you might be connecting us through an API. There's various mechanisms that we've got to enable large transfers of data around booking hedges, payments, etc. So everyone uses us for a different reason. The problem we solve is different, and it's about understanding the problem. What we find is they don't know the problem for sure, because if you're not an expert in it, they're often on the sort of first stage of help me here.
Yeah, sure.
I'm confused about this part, but that's where we bring in our expertise. If you look at us comparatively to our biggest competitors are banks, dealers, relationship managers on desks at banks will have something like 10 times as many clients per person. So we're dealing with less clients. That means that we can give them a better level of service. We turn away clients that we just don't think fit the bill, have a really simple needs. Sometimes we'll just say, listen, you're not for us. There's a better solution for you that's more cost effective, because you don't need that layer of expertise. So
yeah, okay. And I think that's really important too, is that, and that's obviously where our relationship fits so well, because, we're exactly the same. It's about finding the solution for the client, and we're not the solution for everyone. So I think that's really important when you can draw on your expertise, though, to point that client in the right direction when it isn't for you. And I think that that's something that the team at Ebury should be super proud of. You said there's lots of issues and problems that you can solve. Can you run me through maybe one or two issues that are typical that you solve for businesses?
Sure. So let me give you an example of an exporter. I'm exporting across the world. Now I'm getting paid so I am a shoe exporter. I'm getting paid by client or suppliers in the UK and Europe and the US. actually getting paid by those clients can be quite a challenge, because if let's say you're using an Aussie bank, sorry, they're not going to have bank accounts that they give you in those jurisdictions. You need to go and open a bank account in Europe, in the UK, in the US. That's going to take you a year. You might not even get them. So what we'll do is we'll onboard you to the platform. We'll onboard all the anything within the entity structure, and then we'll give you local what we call collection accounts. So we'll give you a your Aussie shoe exporter. We'll give you a Euro account, and to a Euro account, a pound account, a US account in this example. But that account will be local. So all your suppliers will be paying you a domestic wire. They love that because you look like a big, well-established company, but they're always just pinging you a local wire. If you're sending it cross-border, if you're sending euros to Australia, that's a pain because you're actually sending it a SWIFT. It's going to cost them more. They don't know how to do that. They might have to go down to their bank. So it enables you to grow and export a lot faster, to do that first layer of, how do I actually get paid by my suppliers? And the same goes for if I'm selling on a marketplace. And we see a lot of that, right? If you're selling on a marketplace, they want to make sure that there's a good experience for their clients. And then when they pay you out, that they just pay you to a local account, local being into that jurisdiction. So that's exporters, something that we help with them. We've got 40 bank accounts that are local in 40 currencies, which is easily the most comprehensive in the world in terms of what we do here.
And we actually hear a lot about that too, Rick, in the early stages of business in growth, where people have got a great business, they're expanding overseas, and that particular situation of setting up financial institutions to be able to trade in those countries is often the thing that stops it or will hamstring that plan, as the time you suggested. I've heard 9 months, 12 months, 15 months, that's the amount of time it can actually take to establish these financial institutions. So to me, that's gold. That's probably one of the biggest things I've already taken out of today, the first 15 minutes, is it solves that issue for exporters. What are one of the tell me about the common pitfalls.
Common pitfalls we see, I think it's typically around how people manage that risk management piece, understanding actually where the FX risk arises, and then how to manage that. And so that's about sitting down with them, what we talked about earlier, and getting a hedging policy set up and actually taking the time to do that. But people get busy, they don't understand it's complicated, so they don't sit down and say, okay, I've got, I'm paying for this on an ongoing basis. I'm buying stuff from India, from the US, from China. Here's how long it takes for me to agree terms and pay for them. How do I go about hedging that? Because there is skill in that. There's multiple products. There's multiple currencies you can be using. There's different approaches. There's I've got a credit risk when I hedge. Optimizing for all of those things. So getting that wrong, there's a lot of pitfalls within that, to be honest. And we see all of those mistakes. So it's just about being open-minded and say, here's how I do it. What's your view on it? But I guess the most simple pitfall that we see is therefore just not hedging, like for hiding from the problem. Market's not going to move. It is. You've got to be prepared for that. It's not like your lending world where rates rise, but they rise slowly. You've got time to adjust. Markets can move really fast, and you've now locked in something that is 10% offside in a week. In a bad example, you now have a situation, so you've got to be prepared for it in advance. So the one that I hear that we always sort of roll our eyes at, dare I say, we love our clients, but that we hear commonly is hedging's a gamble, which is totally the other. It's the opposite. If you've got something an exposure that's in 3 months, whether it's an asset or a liability, you've got to be considering, how do I minimize P&L volatility? How do I protect myself?
Yeah, right. It's interesting that you would say that, because I think the hedging part is typically, that's the part whenever you're talking about it at a conference, that's not certainly FX related, but it comes up in conversation. The hedging piece is always the bit that seems to be left out. It's not the bit that's taken into consideration at that very first step. And that's obviously why you use experts. And that sort of led to my next question is we've spoken about, service and expertise that you guys have in the industry. Why would a broker bring their client to you, or why would a client come to you, as you said, rather than the bank?
Well, look, it depends on the client, to be honest. But we always give a higher level of service for the clients that suit us. For each and every client, we'll sit down and try and do that discovery as fast and painlessly as possible. And I'd say 95% of clients, we can find some form of value add within it. But we're keeping an open mind about how they are best utilising us or an incumbent. Yeah, and sometimes they may be using us and a bank for portions of it. But typically, the main things are credit. So if you're doing anything that involves risk management, you've got a forward line. We need to give you credit on that. We're going to optimize that better than a bank will, because they're looking, as you well know, same in lending world, they typically just want to look at your balance sheet, get security on it, and forget about it. They don't have the appetite, complexity. And then the other things they'll typically be using us for that we're just miles better than everyone else is the technology enablement, the platform's better, what we talked about with collection accounts, API plugins, tomorrow's layer of technology that our competitors don't have. And what we're seeing over time, mentioning the bank, is that, and I think it's the same in lending world, is that they're specializing to their sort of core. They're being mandated to do so. They're less interested in doing this type of business. And we're seeing a lot more specialization. So I think more than half of, believe the research says more than half of FX businesses with FX requirements are now not using a bank. And if you go back 10 years ago, that would have been 5%, because we're just getting better at doing it. We're better at banks. So yeah, everyone's using specialists. And we see that not just with FX, don't we? It's the same with lending. It's the same with all of those services, insurance. Everyone's just using the best and most powerful, specialized, digitized, typically.
Correct. I agree, and I think that we find currently in the industry as well that, we really are back to cookie cutter in mainstream lending and mainstream services. So, if you don't fit the mould and you don't fit the box, the interest in the story is really no longer there with some of these mainstream providers. And so I think that's what you get from a small specialist team. And, what we both do is niche. Debtor funding is niche, FX is niche. But when it's needed, you really become this amazing silent asset in someone's business. And I think that's the key in getting this message across, is that if you've got any clients, or you are a client that have joined us today and you're dealing in international currency, there is absolutely no harm at all in reaching out to the guys at Ebury and finding out exactly if either A, the solution you've got is working, B, whether it can be better, or see whether you actually have the proper solution in place, if one at all. So I really do strongly encourage that. I've seen some great calculations and calculators that some of your BDMs use to actually be able to show clients exactly, what it may work out to be and what the effect is. Now, Rick, am I right in saying that in some currencies there's actually financial benefit to working with Ebury, and that rates can be better depending on the currency in the country?
Yeah, we typically find clients aren't using us because we're cheaper, that we price every client the best that we can, but it's a premium offering. We deal with less clients, and we give them a really high level of service and understanding. Their saving comes because they're doing it well rather than the actual margin. But yeah, we're turning over tens of billions in FX. We access the market rates for it. So it's just about enabling that for clients. And in general, we can optimize pricing, yes, comparatively to a bank. But again, if you're coming in with a price only mindset, then you're often approaching it wrong.
Absolutely.
Yeah.
And we know that holistic, or that whole solution, is often the better way to go, because I'm only assuming in an example of yours, for instance, that you might not get the great collection support and the strategy. So you might have great funding, but it's costing you twice as much on the back end to collect that funding. So I feel as though you're right that, you know, the mindset of rate comes back in because of the increasing interest rates all the time, but it's also about bang for your buck and what that provider or what that service provider is actually doing for your business. I know we touched on it at the beginning, but, you know, personally from you, you've been in the game for, you know, for a long time. You know, you're seen as one of the go-tos in the APAC region when it comes to this space. What are you seeing in the market at the moment? Not necessarily that's just affecting FX, but what are your thoughts on the current market?
In terms of, other than, you know, the market's always moving, people always asking us, where do you think it's going? I never know. I'm humble about that. I probably know less than others. But in terms of the, I guess, topical things that we're seeing more of that we never saw, one was sanctions. And you know, Russia, we saw people's supply chains blow up, money being stuck in foreign currencies and in foreign lands. And on that theme, I guess we're seeing a lot of questions around, that's where our knowledge of supply chains is. You know, have I got a solid offtake here? The relationship with China. You know, if I'm an exporter, should I be selling everything to China, even if I've got offtake? Well, not only will they pay me, but will there be regulations? Will there be, you know, sanctions stopping me from doing so? So I think the questions that we're getting a lot of, that you need to come and talk to us, because we're sending in something like 30,000 payments a month to China. We've got people on the ground in China, as an example. Liaisons on the markets that you're buying from is around, you know, where am I smart? Where should I be buying from? Where should I be selling to? And, you know, what else can I do that's new? That is coming up a lot more. I think in the past, people just imported from China. Obviously, it wasn't long ago that they weren't even importing from China, but there's actually a lot better. We're seeing a lot more, you know, and the services going to different currencies and countries that people are trying. In that great big globalized world that may be breaking down, right? Particularly in sort of 6 months ago, where with the geopolitical issues, there was a lot of nervousness around, well, if I'm exporting to, you know, what happens if we do get a geopolitical risk event in China and I've got a boatload of goods sitting there, what's going to happen? Should I be thinking about that? And that comes back to your world a little bit as well, making sure that the lending product's appropriate, protects me. So we'll work with their lenders as well to make sure that they're protected. So I think that's something that's pretty new in terms of we're always thinking about, you know, where's the market going to go? But that's something that we're getting asked a lot about.
Yeah, perfect. I've just got a question coming, which I'll ask you now before we move to the last one. So we're just about to head into our last question that we had prepared for Rick today. But so please start using the chat or the Q&A function because Rick's ready for your questions. But one of the ones we've got, is there any client that's too small, too big? Where does the Ebury appetite sit?
Yeah, there is. We can handle all small clients. It's just about making sure that we maintain a level of service for the clients that we do choose to work with. So if you're doing typically less than $1 million a year, you're probably not in our sweet spot in terms of too small. But I will caveat that with saying, if you are buying from an exotic currency, a weird and wonderful market, often we can add value there. In terms of too big, once you get up to, you know, Qantas are not our client. Surprise, surprise. So once you get up to that sort of really top ASX, we're not optimizing for them. We've had conversations with them and we'll just say, stick with your bank. They're normally using a panel.
Got it. What are some of the latest developments in the world of currency? Like, we'll focus on all these other things that are happening in the market, but what are some of the latest developments that are sort of happening there, and what key factors should individuals be wary of?
I think a lot of the development is actually related to what I was talking about in terms of payments. So you'll be seeing it already in Australia with the new payments platform. But that helps how any business that's using, the payments infrastructure in Australia or cross-border. So there's a lot of improvement with that. Every SEPA is European payments are releasing new updates, new payments platform. Will your clients be aware of that, Donelle, in terms of how that works, or question for you?
Yeah, no, that's something that it's our job to try and make sure.
Okay.
Again, you're right. That's
Yeah.
our job. Our clients are not always aware of what's happening. A lot of them are actually, as you know, working in their business rather than on their business, and keeping an eye on what's happening around the outside, especially in that SME space where, they're in the middle of growth or they're on their way out of a tough situation. They're not always keeping an eye on the outside market. For us, we're super aware, especially with what we do, especially being debtor and all the pitfalls that we know that have sort of fallen along with that over time. Verification of ledgers, being able to automate that instead of still being a tire kicker type. You have to pick up the phone. You have to do that work to know that you're funding a verifiable debt. So you're right. There's a lot of movement that, we as experts try and keep our finger on the pulse to be able to make sure that our clients are reaping the benefits of what's coming, whether good, bad or indifferent.
So to finish it off, I guess, Aussie's a really good example. We're moving from a series of quite archaic settlement systems to a new payments platform where we're going to have instant settlement. Now, if you take cross-border, you've got a layer of, so we would call that a scheme. You've got the Canadian way of doing it, the US way of doing it, the European way of doing it, let alone all the complexity with every other sort of weird and wonderful part of the world is trying to not only upgrade their systems, but upgrade the way that you settle within them cross-border. So I think that's where there's a lot of development happening that is, in the next 20 or 30 years, I'd expect it to be a lot more simple, but at this point in time, it's not. You send a lot of payments through the SWIFT network. There's still times where you send money and it's sitting there for 2-3 days not crediting and you're not getting information back. That's a really, really old school way of doing things that is going to be disrupted and is being disrupted.
Absolutely. Good question. How do you guys work with brokers?
Right. So we have a team of partnerships people that will work with the broker in terms of onboarding and monetizing for the flow that you would send over for the clients. We're respectful of your relationship with the clients. Typically, you've been working with them for years and years and have a really strong relationship and don't want that to be disrupted. So we're happy to be led by you on a client by client basis in terms of what you see as the right way to have that conversation on board. But typically we will have a discovery call with them, half an hour, just like this, with you present, you being the broker and us, and just try and understand the business, and take it from there. But we do have a team who look after that.
After the broker channel, great. And if a broker's sitting down with a client and they obviously know that they're either importing or exporting or they're dealing in foreign currency, that's obviously the first thing. Is the minute that you see that's a flag to identify an opportunity. But what are some of, are there 2 or 3 questions that a broker could ask to really identify whether there is an opportunity in with their client?
I think you've actually nailed it. We'd say don't take it too far. Just identify if they do have exposure to a foreign currency is pretty much enough. How much is also obviously relevant. If it's just one invoice a year of $10,000, it's probably not worth it. Well, it isn't worth it. But just identifying that need opportunity, then let's have a call. We try and make that as fast and painless as possible.
Great. I've got another great question here. How long does it take to set up a facility?
As a broker or as a client?
No, for the client. If a broker's bringing you a client and everything goes ahead and then it's time to set up the facility, what's the typical sort of lead-in time?
Typical lead-in time would be from a day to a week. But again, It depends on the complexity. We all know Australian clients to onboard can be painful in terms of there's always seems to be trusts there and complexity with it. But, we're onboarding a lot of clients. Ebury's got 45,000 corporate clients globally. We're good at onboarding clients quickly and painlessly.
Excellent. And is there a contract term?
No, it's a non-committed facility as opposed to Lending World. No, so it's about onboarding, and then the client's always got the choice to use us. I mean, once they're entering into a contract, that's on a what we'll call OTC basis. So, it's contract by contract, and obviously they need to settle them. But it's not like a lock-in that you have to use Ebury for X amount of time it's a no obligation on board. Which is why we see that as this last step. It's about identifying, do you want to work with us? Is there a need, rather than let's onboard and then figure it out.
Yeah, great. Here's another good question. You can tell who some of the debtor finance brokers are that are on, but one of the other ones is around fees if they don't use the service. So they have an open facility, but they don't need it that month. They're not transacting. They're not doing anything. Are there any fees associated with that?
No fees. No fees.
Brilliant. So obviously, apart from reaching out to us, how do you suggest that clients reach out to you, and then brokers as well? Are there two different paths? Is that something we'll share after this webinar with everyone, whether you're a client or a broker? What's the best way to go for anyone that wants to reach out?
Sure. So if you're a client, then you can go on our website on a callback, and we'll have someone call you back within 5-10 minutes. Believe me, they love seeing those pop up. And then and same thing for the partner channel as well. There's a few people. If you want to hit the website, it'll pick it up and we'll get in touch with you there. I think that's the best way of doing it. But by all means, we can share some of the people. We're all humans. We can share some of the people that are based in your states, depending on where you are as well, for the partner channel.
Perfect. And so for our clients and brokers today, I just noticed the questions have stopped now. So I'll start the wind up and see if any more come in, Rick. And I love it when we give our people back time in the day. And I think, certainly when you talk to you, you're super knowledgeable, you know what you're doing. And you're right, when you talk about it, it's not that complex. And we say the same. Again, niche, we're the experts. We want to maintain that relationship for you and your clients. We want to be seen as a bolt-on to a broker's business, not someone that's there to hinder it, but someone that's there to actually support that. And I think you guys are very much the same. We'll go with clients first. We have got a few clients on the webinar today. So, and obviously they're interested in FX. What's a parting thought that you would give them today to finish up the webinar?
Or a parting thought, that's an interesting one.
I love putting people on the spot at the end with this one, Rick.
Listen, I always say, talking to clients, it's about the preparation. So if someone asks me to cut down a tree, it's been 9/10 of the time sharpening my axe. And that's what we try and do with clients. Don't go in at the execution and don't go in too late. Come in as early as possible if you've got a problem, and we can and take the time to solve it.
Perfect. And for brokers that are looking, to supply more services to support their clients even more than just, standard lending, we know we're looking at insurance now and, SMSFs and brokers are really getting busy. What do you say to brokers who are dealing with clients who are trading in international, with international monetary funds?
Once again, it's not difficult to have that first conversation, and we don't expect you to be experts in it. So don't be overwhelmed by it. Identify the opportunity and have a conversation with us, and then we can take it from there. It's exactly what you said in terms of it's just an extra monetization channel that I don't think lots of brokers typically come from or have had exposure to. It's not overwhelming, and a lot of clients, if you can still keep engaging them in the same ways that you have been around, around their lending channels. But how else can I make money? How else can I add value to my clients and identifying these opportunities and getting them in the right room? We're seeing a lot of that, right? That everyone is making sure that they add as much value for clients outside your core lending. We do the same for our clients.
Fantastic. Rick Roache, all the way from Singapore, Managing Director of APAC for Ebury. It's been an absolute pleasure. Thank you so much for sharing, your expertise, your insights into FX. For our brokers and our clients that are out there, this is really something you should consider, and certainly from a whole of business perspective. So it's not just about how you're trading your dollars, how you're paying for things, but it's the risk management, the collection, the insurance, the hedging, all of those things that Rick has spoken about today. It's really, really important and can be not only a time saver, but a cost saver by having the right processes and the right streamline processes in place. Rick, enjoy Singapore. Look forward to catching up with you when you're back. Thank you so much for joining us for episode 6.
Thank you very much for your time, everybody. Appreciate it.
Thank you.
Thanks, Donelle.
Cheers.
Bye.
Bye.